Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Amir Ashraf bin Abdul Rahim. My ID number is AC0105019. So today I would like to talk about management accounting. So in management accounting, information is product to lead, to aggregate and to distort to be relevant for managers planning and to control decisions. Internal accounting system focus to narrowly on producing a monthly earning reports. So for consequently in management accounting reports are of little help to operating managers attempting to reduce costs and improve productivity. The reports decrease productivity because they require operating managers to spend time trying to understand and explain reported variance that have little to do economic and technologically reality of their operations. Management accounting system do not provide timely and detailed information on process efficiency or they focus too narrowly on inputs such as direct labor that are relatively insignificant in today's production environment. The system not only fails to provide relevant information to managers, but it also distract them from noticing the key factors important for production efficiencies. Next, the management accounting system fails to provide accurate product costs. Costs get distributed to products by simplistic measures, usually direct labor, based that do not represent the demands met by each product on the firm's resource. Hence, there could be many valid short-term measures that would be appropriate for motivating and evaluating managerial performance. So today's management accounting system provide misleading target for managerial attention, and they fail to provide the relevant set of measures that appropriately reflect the technology, product, process and competitive environment in which the organization operates.
I will talk about the challenge. Nowadays, with the global competition, rapid progress in the technology and also wide fluctuations of currency exchange rates and raw materials, it results in the demand of the management accounting systems. The management accounting system must be timely and have accurate information so that the cost can be controlled and the productivity and production process can be improved. It also has to report the accurate product cost so that the pricing decisions, the introduction of new products, and also the responses to the rival products can be made with the best possible information on product resource demands. The management accounting system also has a vital two-way communication, which is for the senior executives and the subordinate managers communicate with each other. Other than that, it will also be a channel to report to the upper level of management about the product's performances. As a conclusion, nowadays, success cannot be determined with only the management accounting system, but it also has to meet the user's needs, the efficiency of products, and also the marketing. Even if the products have met the user's needs, the efficiency of products and the way of the marketing is great, but even the systems are bad, it also cannot be considered as a success.
The opportunity. Many production processes can be controlled directly, allowing for real-time data collection and analysis of operational performance. Continuous status report can be provided by using automated component recognition and tracking system that is aligned with local area network technology. Managerial performance measurement that are both timely and relevant can be computed and disseminated throughout the company. The computing revolution of the last 2 decades has decreased the cost of data gathering and processing to the point where nearly all hurdle to implementing the cost of data management accounting system have vanished. Simplified and aggregate procedure that were used in previous decades because more relevant and timely procedure would have been either expensive or impossible to implement no longer applied.
Assalamualaikum warahmatullahi wabarakatuh. So my name is Faris Hilmi and I will explain about management accounting rules. 500 years ago, a Venetian monk, Fra Pacioli, described the basic for a well-functioned double-entry bookkeeping system. Thus, the demand to record information on commercial transactions has existed for as long as people trade with each other in the market changes. Before the early 19th century, virtually all exchange transactions has occurred between the owner and the individuals who are not part of organization, raw material suppliers, labor paid by piecework, and customers. There was no level of management, nor were there long-term salaried employees of the organization. Transactions occurred in the market, and measures of success were easily obtained. The owner needed to collect more cash from sales to customer than was paid out to supplier of output factors of production, primarily labor and materials. As a consequence of industrial revolution and the ability to achieve gain through economic of scale, it became efficient for 19th century enterprise owner to commit significant sum of capital to their production process. Owner hired workers on long-term basis rather than bearing the cost and risk of continual spot contracting in the labor market. This occurs because the owner wants to gain maximum efficiency from their capital investment. The long-term valuability and success of managed organization reveal the gain that could earn by managing a hierarchical organization as opposed to conduct all business through market transaction. The emergence more than 150 years ago of managed hierarchical organization created a new demand for accounting information as conversion processes which formerly were supplied at a price through market exchange become performed within organization. Lacking price information on the conversion processes occurring within their organization owner devise measures to summarize the efficiency by which labor and material were converted to finished product. Thus, management accounting development to support the profit-seeking activities of entrepreneurs for whom multi-process hierarchical management enterprise were more efficient than managing conversion processes through continual transaction in the marketplace. The early management accounting measures were simple but seemed to serve well the needs of owners and managers. Their focus on conversion costs and produce summary measures such as cost per hour or cost per pound produced for each process and for each workers. The measured costs include labor and material and involve some attribution of overhead costs. The goal of this system was to identify the costs for intimidate the final product of the firms. In effect, the management accounting information provides substitute or a surrogate for the market prices that were absent in the management enterprise.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Amir Hakim bin Muhammad Ajihi and my ID number is AC0105183. Okay, my topic is management accounting irrelevant? Okay, for my opinion, the management accounting is relevant because there are many points of attractive management accounting system that we can find through the article. The best example of effective management accounting system could be found in Railroad Corporation of the mid-19th century. At that time, there were largest enterprise ever created by a man. To oversee their diverse and dispersed operations, new procedures were invented just to control the receipt and disbursement of cash. The railroads also had developed extensive summaries of their internal operations and performance. Measures such as cost per ton mile were created and reported for each major segments of operations. The operating ratio, the ratio of revenues to operating costs was developed, both to measure the profitability of various segments of business. Other than that, measures such as gross margin by department, selling revenues, less purchases and operating costs, and inventory stock turn were created. Furthermore, the management accounting measures were designed to motivate and evaluate the efficiency of internal process. Thus, the management accounting system was created to promote efficiency in the key operating activity of the organizations. This could be an alternative transaction-based system that recorded receipts and expenditures and produced periodic, probably annual financing statement for the owners and creditors of the firm. Further, advances in the technology of management accounting system were made in conjunction with the scientific management movement. This movement started in metal fabricating companies during the last 2 decades of the 19th century. This goal was to improve the efficiency and utilization of labor and materials. The physical standards they developed, such as labor grade and labor hours per unit and materials quantity per unit, were easily converted into standards for labor and material costs, often combined with an allocation of indirect or overhead costs, were aggregated together into a finished product unit cost that could be used to labor and materials. The standards were frequently updated to reflect the most recent purchases. Then, finished product standards costs were often closer to what we now call replacement cost than to any measure of historic cost, as with the measure of conversion efficiency developed earlier in process industry. Finished product unit costs were calculated to aid managerial decision, which is pricing in this case, and not to produce external financing statement. Therefore, there was little demand for having the unit cost information be consistent with the books of transaction used to prepare summary financial statements. Okay, that's all.
Academic-led history. Why were university researchers oblivious to the management accounting system rising irrelevancy? Why did they take a more active or inspiring role in improving management accounting system design? Researchers of Management Accounting Review believe that academic knowledge of management accounting has been warped by a narrow concentration on a simplified model of a corporate behavior. They claim that this has resulted in over-reliance on one product, one production process paradigm, and that the relevance of cost effectiveness in organization has been overlooked as a result. For making appropriate product decision, 60 years of literature has supported the division of costs into fixed and variable components. The subject of where fixed expenses came from was never adequately addressed in this literature. It also didn't try to put its idea into practice in a real-world setting with hundreds of thousands of products. Management accounting system become less relevant and indicative of an organization's operation and goal as it grew more technologically advanced. Companies like DuPont, General Motors, and General Electric were founded by proprietors who were well-versed in the technology of their goods and processes in the early 20th century. Most CEOs spent their whole career in staff functions like finance and legal in 1970s and 1980s. Directly traceable product expenses become a significantly smaller part of the costs as product life cycle are reduced and more costs are incurred before production begins.
I will talk about the accounting for caravans. Let's look back at the 50th century where the demand for accounting information began. a group of Venetian investors will acquire goods in the northern Italy and then sells them in India. From the India, they will purchase the tea and then sold them back in Venice. From that, they will calculate the profit with subtracting the cost of caravan and the cost of acquiring the initial load of merchandise, which after that they will distribute the profit among the investors. At that time, it is a worthwhile role for accounting. They also take that allocating the total profits of expeditions to periods as short as 3 months was not a meaningful exercise. The investors are more curious about the other things, such as the distance that the caravan covered rather than the quarterly profits. But nowadays, there are many better indicators of company's short-term performance than its quarterly earnings. Certainly, cash flow is important alongside the pattern and structure of a company's cash receipts and cash expenditures.
So, based on my friend said before, in conclusion, the challenge and opportunity for contemporary organization is clear. Management accounting system can and should be designed to support the operations and the strategy of the organization. The technology exists to implement systems radically different from those being used today. And what is lacking is knowledge, but this knowledge can emerge from experimentation and communication. So that's all from us. Thank you.